Hello aspirants and welcome again to Legacy IAS Academy. In this lecture, we will be understanding as to why the foreign investors are not bullish on India. Now, what does this mean? See, bullish is a market situation wherein when you expect that the shares in the market to keep on improving, that is what is meant as bullish. And in such a scenario, you would like to invest more money because the market is going to rise. However, that is not seen when it comes to the foreign investors. That means the foreign investors are not estimating Indians market to keep on increasing, and the foreign investors are not doing what is done in a bullish market, that is invest. So they are not investing as much as they should have. So we will understand why is that the case. In fact, we will also see they should have with respect to the macroeconomic situation India has, but still why they are not doing so. So first things first, if you look at the India's economic growth story, you will find that there is a paradox in the sense that you would want to invest when the economy is doing well, it is healthy, the growth rate is high, so on and so forth. So here you can clearly see when you talk about the time period from 2021 to 24, India is the world's fastest major economy, the world's fastest growing major economy. How at the same time, the average annual growth rate, average GDP growth you see is of 8.2%. Now this is, even the last year's growth rate is quite high when you compare the growth rate of the rest of the world, the major economies like China or the United States of America. We have outperformed USA, China, of course, we have outperformed Vietnam and various other countries as well. So we are actually in a very healthy situation, yet the foreign investors are not betting on the Indian economy. So that is a cause of concern, and that is what we will understand as to what are the reasons for it. Before we move ahead, an important announcement with respect to the new batches that will start at Legacy IAS Academy, having a maximum of only 40 students in order to pay individual focus and attention on each and every aspirant. You will be trained, taught, mentored and guided by the expert of UPSC Civil Services examination. There are certain benefits that you will enjoy at Legacy IAS Academy, that is one-on-one personal mentorship, doubt solving sessions, regular interactions with the educators that you see on your screen. There will be a maximum of only 40 students per batch. There will be daily mains answer writing practice, as well as of course the test series for prelims and mains. Now we also provide a 360-degree coverage of current affairs, wherein the entire week's current affairs is covered through the live classes. So if you want to enroll with us, you can simply do that by downloading our app, logging on to our website or calling on these numbers that are shared here. Now let's understand what are the reasons. So first things first, how much is the decline that we are talking about? So if you talk about the foreign portfolio, and remember we are taking into consideration the foreign portfolio investment. So the foreign portfolio investments, the net flow of the foreign portfolio investment has been negative in these years. What is the net flow? Basically you will have some amount of foreign portfolio investment which are incoming, that means coming to India, and there will be some that is outgoing. So the difference between the two gives you a net. Incoming minus outgoing is the net. In certain years it has even been negative. That means the incoming is lesser than outgoing. So if you look at the year 2021 2, 22 3, 24 5, all of them have been a negative one. At the same time, presently the 25-26 as of now is also in negative. So this basically, and in 23-24 you have a positive inflow. So you can see that there is fluctuation which indicates volatility and a lack of sustained confidence by investors. So investor did become confident, but that confidence was not sustained in their investment habits. At the same time, if you look at the paradox, we saw that the GDP growth was there, but still the net capital inflow, which was quite high in 23-24, which was positive, has gone down. Now this decline has been lowest since the 2008-9 global financial crisis. In 2008-9 global financial crisis, this level of decline was expected because the world was dealing with global financial crisis, as a result of which they are going to invest less. So that is very well understood. However, even without any such global financial crisis, we are seeing a situation like this. Now, if you look at the FDI is increasing. There is a difference between portfolio investment and direct investment. So this is increasing. Do not confuse the portfolio investment with the FDI. What is the difference between the two? Whenever there is a foreign investment of 10% or more in a listed company, it is considered as a foreign direct investment. If the investment is less than 10% in a listed company, then it is a foreign institutional indirect or portfolio investment. So this is the major difference. Another thing is, if the company is not listed, then any investment in such an unlisted company is again considered to be an FDI. So these are the difference between FDI and FII. So we are talking about the decline of the sentiments with respect to the foreign portfolio investment. Now, if you look at the trends in this decline, you will see that there is a sharp decline post 2020-21 boom. So 2020-21, India saw a boom, and post this there was a decline. So you can relate it with the business cycle, wherein there is a boom period and after boom there is a decline. However, it was not related to India's trade cycle as such, but it is a thing wherein after a boom comes a fall. Now that is valid for the economy. It could indirectly be implied to the investment as well. Now, if you look at the equity outflows, they were partially balanced by debt investments. Now, what do we mean by that? India saw equity outflow. Equity outflow means the money that was invested in India's share market. Now, share market is basically an equity market. Share market consists of shares. Shares can be equity shares or preferential shares. So all the equity shares wherein you get actually the ownership of the company, that's where the outflow has taken place. But to some extent, it has been covered by the inflow of the foreign exchange in the debt market. What is the debt market? Debt market is as good as loaning, basically crediting the money, right? Borrowing and lending the money is the market which is known as the debt market. So in equity, what happens when you take money from someone, you don't have to pay them back, because you are instead giving them the equity, that is the ownership of your company. Whereas when it is taken as a debt, you will have to pay them back. So the foreign investors had started taking out the equity investments that were there, but a lot of debt investments did come. So this is the trend that we are seeing. Moving ahead, the private equity and the venture capital investors, they have started cashing out, lowering the fresh inflows. So who are these? The private equity capital investors means the people who are investing in equity, the private players, and the venture capital investors. Who are venture capital investors? They generally invest in the startups, in the series A, B, C funding rounds of the various startup. So that to an extent has declined. Now this has also had an impact on the Indian rupee. As you can see, the rupee is in trouble because the dollars are venturing out, and the huge demand for dollar elsewhere is there, as a result of which rupee against the dollar is depreciating because of this situation. I hope that's clear. Now, another reason for that is the balance of payment that exists. So we are now discussing why is the investor or the foreign investor not confiding in India. Another reason is the balance of payment. So India has a huge merchandise trade deficit. So if you look at the merchandise trade deficit, this is zero. things below here is negative and here it is positive. So merchandise trade, as you can see, has been in negative only. Trade means export minus import. So we are exporting less and importing more. That is why the negative. Whereas the trade in services is positive. That means we are exporting more services than we are importing. So this trade in the invisibles, which is known as the trade in services, is helping us to lower the current account deficit. But in the trade sector, when you talk about the foreign investments, merchandise exports play an important role, because the dependency on invisibles or the services when it comes to investors sentiments is quite fragile. It is fragile to the external shocks, whereas merchandise export play an important role, and in merchandise trade we are not doing well, and that is another reason. Now, next is the tariff. So the other concerns of the investors are tariffs by the USA. India has been imposed with a lot of tariffs by USA. That is a concern. It worries about the corporate earnings, because of which the corporates may not be able to earn, because there are huge tariffs. India's export will decline. The corporates that export things will not be getting those tenders, and their earning may also go down. Overvalued market valuation. Overvalued. India's market is said to be overvalued. Its startups companies are overvalued, and the currency, the rupee, is depreciating, as a result of which the investor sentiment is down. So what can or how can the government respond? The government can respond by boosting the domestic consumption. If the companies are not able to export out, boost the domestic consumption itself, so that the companies still keep on growing. Also make ease of doing business even better for more people to start doing business. Structural reforms in taxation, infrastructure and digital economy to make it easier for foreign investors to invest, companies to do their work. And in the long term, India should strive to make India more attractive for investors by simplicity of laws, ease of doing business, ease of investment, transparency and clarity of the rules and regulations that are there. Thank you.